As we've talked about, things are trending up in the mortgage and real estate world, but lenders are still feeling the effects of 8 straight quarters of losses. Yeah, we talked about our '08 scars. I think we're going to have some 2023 scars as well. Let's dig in. You guys know I'm a nerd for all things real estate and lending, so when Stratmor dropped this article, I was all in. It's really just a deep dive into what lenders can do to rebound, survive, and maybe even thrive post-2023 after a mega slowdown due to higher interest rates. The most surprising stat that you may not know about is the losses these lenders have been operating with. This graph is a sample of over 350 different independent mortgage banks, and it shows a rough 2-year stretch for everyone involved. You can clearly see with this one graph why so many lenders have called it quits or looked to merge with the larger and safer company. I mean, we can zoom into the most recent quarter earnings, or more accurately losses, and see that lenders were still losing 34 basis points in Q3 of last year. For perspective, guys, that's really about $1,000 loss every time they close a loan. And sure, every business and industry deals with tough times and has a season where profit is low or maybe even negative, but you can only do that for so long before capital runs out and you have to close your doors. I mean, ask yourself, how long would you guys continue to run your business if every single transaction resulted in a $1,000 loss? I don't know, depending on your capital reserves and risk appetite, your answer might only be a few months or maybe a whole year. But either way, it's an alarming question that will test the resolve of even the strongest companies and strongest CEOs and owners. Take a look at the darkest of days there in Q4 of 2022. Nearly 100 basis point loss. Now sure, you can say, hey Ryan, look further left on that graph, and it's easier to stomach the recent losses when lenders were making 203 basis points in 2020. And that would be a true and fair point, but team, neither of these are truly healthy here. The wild profits of 2020 and the awful losses of 2022 and 2023 are not indicative of a healthy mortgage and real estate market. Personally, I'd love to just start there and get back to a normalized market volume and earnings. It's incredibly tough to run a business with these wild swings. Another interesting graph is the percentage change in total company full-time employees, FTEs. Take a look at the large drop-off for banks, credit unions, and IMBs, down a considerable amount, and the number continues to drop. Depending on the size of the organization, we may see FTE count reduced by 40% and maybe even above, guys. A huge correction sadly felt by everybody involved. Now, this may be a deep dive into the lending world and their current troubles, but this certainly can be applied to your business as an individual loan officer as well, and honestly, realtors too. If we pulled their data, it would look very, very similar because we all know as the lending world turns, so goes the real estate world. They power and fuel each other, so these takeaways and strategies apply to all of us, lenders, brokerages, loan officers, and realtors. Stratmor focuses on the fix in this article with 5 strategies. We'll go over them quickly. You can certainly dive deeper for yourself afterwards. Number 1, scrutinize cash, stating clearly understand and closely manage cash flows, the lifeblood of any company and the foundation to survival. Cash is king. We all know that. Number 2, surgically repair. Do what it takes to break even, triage to build a sense of safety and security in your company's financial position. 100% right on there. Number 3, stabilize. Achieve a reasonable level of recurring profit and build your team and culture to create a sense of connection and stability. Number 4, strategize. Engage in robust long-term planning, earn the respect of others, and clearly identify your unique value proposition to build your esteem and recognition as the industry leader. Number 5, self-actualize. Fulfill the vision, mission, and purpose for your company. This entire conversation is one that I'd actually love to unpack even further with Stratmor. I've reached out to Garth to see if you'd like to jump in with us and unpack this in long form, so I'm waiting to hear back and I'll let you guys know. There's a ton here and I'd love to unpack it for you all. It's really, really fascinating when you look at the data in totality and what has forced billion-dollar banks and IMBs to do over the past few years. Check it out for yourself with the link below. Hopefully we'll get Garth on soon and do a huge deep dive with him. See you guys next week.